Hello guys, and glad to have you on board again today. Happy New Year to each and every one of you, of course, and I'm going to rush immediately to the charts and to trading workarounds because of course I have limited time available this morning. You know I'm not going to be there like I am not each and every Monday morning. Life goes back to usual, so this is what this is all about. 15 minutes to review a shit ton of stuff, so let's get right into it. So I'm not going to get into very detailed scenario. You know that there is still a way longer than that expected yearly review in which we're going to talk about 2020, but most importantly forecasting my plans for 2021. But this is coming later throughout the week, possibly this afternoon. That depends on multiple external factors. But yeah, anyway, so today we're going to talk about indices, we're going to talk about volatility, we're going to talk about cryptocurrencies. Actually, we're going to start with these because this is where we got the shittiest volatility overnight. We're going to talk about WTI and gold. These are things I care about. We are going to avoid specifically the forex, even though there are things to talk about. There's no emergency plans to trigger right now, so I'm going to save these for the weekly for the yearly review expected later this week. But we're going to quickly talk about Apple and Amazon to be definitely looked at throughout throughout this afternoon session in the US, because they could have a rough start of 2021, but we'll get to talk about that. Okay, so starting with, yes, I guess crypto. Okay, so crypto is still managing its way into these areas. We're breaking yesterday's low point, which is kind of a red flag for Bitcoin. This is something that hasn't happened for a little while. Of course, depends on the candle close, but you also know that when the market has gone this way, when it breaks down the low points, of course, we don't know for sure that it's going to be a bearish sign. All we know is that unless we get to close this candle with a lower shadow candle, it's probably going to be the end of it. There's no signals in here because this is just way too much in terms of momentum, and therefore I think it's hardly going to be managed. We've managed to get a pretty nice close, okay, and the start of this year has been pushing away from 29k right above to 35. So this is really kind of a nice bull run for the early stages of this year, really setting the course for a nice bullish year ahead. But once again, if you think that markets are going straight lines from point A to point B, you really need to review your classics, because that's definitely not the way to do things. So I expect some consolidations to show up, might actually be the case as we speak. So on the opposite end, Ethereum did kind of something wow. So it's much like same rotation and terminating the year in here, and bang, starting by fucking up all the 700 area to go right up to eventually even closer to 1200, which is definitely a big area. Anyway, the level I cared about was breaking this resistance and going ourselves on top of $838 and $28. That's something that we have done without any single problem. We've managed to set to weekly candle close very brutally on top of it, and even confirm it by this week. So I expect right now that the market is very, very likely going to build some kind of a support around this 800 area. So I kind of expect this one to be retested in the future. Just the question is, what are we going to do first? Are we just going to range right now out of this area, or are we just going to go immediately all-time highs, which is a possibility? I mean, we've nearly made 1200, so going 1500 isn't necessarily that big of a deal. Or are we going to do some kind of a Bitcoin-like stuff in which we get there, work the range below the historical highs, and keep pushing? The only thing I think about is that regarding the current momentum state, in which we're accelerating parabolically, we're really going fast forward in the momentum, which is not necessarily a good sign, because it, of course, brings prices to some significant rises, but it also creates an unstable area, which means I would like to see the market consolidating a support over 828. That would be a far more healthier sign for the future. But of course, I'm not the one deciding for the momentum, so I'm letting myself ride. I've triggered a 25% profit taking yesterday at $965 per Ethereum, a 15% profit taking. I still have an additional 10% to take, which is still already it's already loaded in the tradable account, ready to be exchanged for dollars. I'm just waiting for an appropriate timing and appropriate signal. So this night could be eventually the signal I'm looking for. If I have a look at the lower chart time frame, we'll see that definitely something is going to happen out there. So it's still, yeah, okay, 36 seconds to get to close this one. So out of this candle, if the next one's bearish, we're probably going to be able to set the course for consolidation. Then we'll have a market top and likely going to build some retracement down to these levels or something in between. I hardly think we're going to retrace down to the 700. Could be the case, but that would require some kind of a speculative crash, which means we totally erase the previous move, which is not necessarily what I think is the very likeliest options into Ethereum. So I think first of all, eventually building some kind of a supporting here, and eventually later on into a second stage type of consolidation could be going down to 700, but I doubt it at that point. And that's also not to mention that really, I'm not really triggering any bearish action right now, because this thing can just keep on going straight up to 1500, okay? These kinds of momentum are the hardest ones to reverse. So if you're trying to play God right now and saying Ethereums are rising too high, then oh God, this is really simple to explain. Why is this rising so fast? Because there is a crazy fucking people demand. All of the people who got into Bitcoin figured out that there was something to do with Ethereum, and I already told that to you quite a while ago. But the thing is that, of course, there is still a fairly limited supply. We do have the Ethereum 2.0 that is requiring staking, which means some people have got in and will not be able to get out until 2 years. And there's shit tons of long-term speculators who got their hands into this like I did, and they're probably not releasing any more of their coins than I do myself, which means a fairly limited profit taking, but we're keeping most of our coins for longer perspectives. So very limited supply, crazy stupid parabolic demand, therefore prices rise quickly. Okay, but I doubt this structure is as unsafe as Bitcoin was in 2018. Same thing like that. People in this boat are in this boat for multiple years, and just like I am, they are not releasing most of their coins. They're still, at some point, for those who are more experienced professionals or stuff like that, they will be riding this thing as it goes, which means buying and selling and arbitraging the possible ranges. I'm still basically waiting for those goddamn ranges to trigger, because at the moment the only thing we do is breaking out of trend channels, and as we keep on doing this, I see absolutely no reason to rush to the exit door. What leads me to believe this as well is the huge momentum signals that we've got from ETH-BTC, which is basically erasing this entire consolidation in nearly 2 days. So that's hell of a momentum. I wasn't too bearish in here. I told you I was really looking at this as possibly being a trap session, but it's hard to know. And now, of course, we've got a clear and clean answer. Other people has definitely been making these Bitcoin to Ethereum arbitrages just like I did, and that was hell of a choice. So basically, the taking profits I've made are mostly out of this. I still forecast a hell lot of gains coming from ETH-BTC, but of course, remember that we don't know how long it's going to take to manage breaking this resistance. I think this support is going to hold for a long time, so I expect a possible range in between. It's just an appropriate question of timing, but when we'll get to break this level, we'll have plenty of shit to talk about. In the meantime, don't be too aggressive with too much Ethereum versus your Bitcoins in portfolio. Keep up a managed portfolio. Don't go too aggressive one way or another, okay? Still waiting for those ranges to show up, and there will be healthy signs of testing the trends. If we build those ranges and break them to the upside, then that will be a far healthier structure for the trends to keep going, rather than trying to keep on parabolicking this stuff. Okay, that's for crypto, and that's where we had the most things to talk about. Let's get WTI and gold next. So this is the area I'll care about, and looking at the stupid momentum we get here and there, I suspect this can be done fairly quickly into the WTI. So looking at this area starting at 52, where we've got a shit ton of technical cluster, but you also know that this is a bearish resistant context, but it's very wide because of how stupid these things turned out to be. And more importantly, as these things actually, oh, there should be support context. No, they're resistant context. Okay, so we have a resistant context out there. The thing is that I clearly think that the market's going to work areas on top of it. Of course, we know that we've looked at some extremely bearish levels for these assets, so I doubt we'll ever get there again. The question is, of course, we've gone stupidly low. We might be going stupidly high. So I expect the market to eventually turn out a bit irrational into this area. But I suspect it's not necessarily going to actively break these levels. So we'll test this trend line. I expect a few candle to closes on top of it, but I hardly think we're going to break the level out by itself, okay? So something I would say starting at 52 right up to 50 is an area of interest for experienced speculators. It's going to require reverse trading, okay? So we're going to trade reverse. Daily 4-hour charts for experienced traders is something we're going to put in motion within the next few days, something to bear in mind, okay? We're going to talk about this one, of course, into the yearly review. XAU-USD, still goddamn don't know what to do with this guy. I missed my entry points into this area for just, an inch away, but that's sometimes things that can happen. So we're starting the year with a pretty dangerous feeling on my end, because I still can't tell if this thing is going to skyrocket, like breaking the previous resistance, going parabolic like every other asset because there's too much money being printed, whatever. I don't know. It's just I hardly want to buy such a thing after rising so significantly over the latest few years. Think about it. I mean, the cryptos have risen. Okay, they definitely did, but gold has really done this job much bigger than that. And in that perspective, I have a look at the latest update I've made, the latest ID in which I compare cryptos to gold, and you can definitely see that gold has been accumulating a lot more money than cryptocurrencies over the latest few years. So yeah, there's still some room, of course, to go irrational because the market can go limitless to the upside. But yeah, there's also several possibilities in which these things start winding down their gains. Okay, so we'll see all about that later on. We'll talk about that in the yearly review. I'm not talking about forex, but we're going to talk quickly about Apple and Amazon right now. So I'm looking at shorting Apple for quite some time. I've been triggered my stop loss last week and still questioning whether or not this was just another stupid trap. So of course, if this week we get a negative bearish candle, then on that perspective I'm going to start selling again. This is still the question of what I'm going to get this week, because last week has been signaled as an overbought cluster into a fairly interesting reversal scenario, though I might consider getting back in. But normally these signals are supposed to occur at the trend channel, so I wouldn't be surprised if Apple was rising to 145 area, in which of course I will try looking at selling again, signals dependent here as well. Of course, if this area is totally blown up to get much higher than that, then that will make the scenario a lot more complicated to me. Okay, so these things can definitely turn out to be stupid, but they've also been stupid for a long time, and therefore this is the point in which Apple could start falling off the cliff. And once again, this is already fairly extreme. If you have a look at this, you'll figure out, oh shit, that's even bigger than that. Okay, so if this thing reverses, it's definitely not going to hold on to the 100 support. Okay, it's more about these things may collapse over the multiple years of stupid bullishness we've had. Same thing goes, in my personal opinion, for Amazon, who can obviously keep on pushing much higher than that if you have a look at the longer things. But of course, if these things were on the verge to terminate, we will consolidate things that started back in 28 and had pretty irrational late years, which means reversals can be brutal. But I don't expect this thing to crash out like they're worth nothing. They would definitely worth a lot. It's just like they might lose some value before ranging and reactivating later down in the future. Okay, timings in here are pretty dangerous to get to buy. What I like instead is the structure we see into the weekly chart. We're going to talk about this one into the yearly review, of course, but I'm introducing real quick because we're going to need to talk about these two guys to make a clear and clean analysis of the S&P 500. In here, what we have is a nasty consolidative structure after expansion, which means this is a diamond structure. We got in without volatility. We expand, we contract. If we break it down, that's definitely a diamond reversal. The same thing we've had on Boeing. So you know how these things reverse. They reverse straight line when they get out and generally retrace back to the previous supports and generally even break him by just going a hinge below. So that would mean that current prices could be offsetted by 50% on Amazon if such a structure were to trigger the breakout. Of course, as far as we speak, there is no such a thing. So it's really more about monitoring potential bearishness rather than actively forecasting it. Same thing goes for Apple. Like I said, these guys are really fragile, but that doesn't mean they've been broken anytime soon, okay? They could do it, and if they do it, there's plenty of drops in prices to be expected, and these guys weight a lot in the psychology, because if you see Amazon and Apple losing grounds for more than 10, 15, 20% of the market top, that will send a signal to the rest of the market. So we'll see all about that. What I still feel with these guys is that they could trigger some kind of a contagion effect into some early unexperienced traders, though I'm still questioning this perspective. You know that I was looking at 3750 as a very tough area for potential reversals. The thing is that they didn't nearly show up. Last week, terminating the year has been just as bullish as possible, basically like, okay, who gives a fuck? It's just bullish. We've tried breaking down the wedge structure we were exploiting previously, and it actually turned out to be a bear trap. So bear trapped and breaking resistance, it's clearly sends the message for me that the market doesn't nearly give a shit about going bearish. And I don't nearly think that's an irrational bullish sign either. I just think this is just the type of things in which we close the year at the highs, and we might expect these types of candles to show up lately. So in more of a short-term approach, I think that stock market right now is absolutely uninteresting, as crazy as possible. So I'm not nearly looking at it because I think it just makes no sense. It's just going to keep on being these 45-degree angle stuff, boring, low volatile. We make 0.5% a day and we don't consolidate. So for bears, that's a pain trade day after day. I so much remember these days. I don't want to get to fight against that. So I'm just keeping my cover trades right now, because I still see absolutely no reasons to put them out, and I expect the same stupid reaction later on this year. We're gonna grind our way up, God knows how high, eventually 3,900 for 4Ks possibly, but all I know is that at some point, bam, we're gonna fuck it all up just one last time to do just as we always do. I think we're gonna overlap this level, so I think 3,500 are gonna be retested. The question is just, do you really want to be pain traded in the meantime? So I keep my trades as long as the momentum remains quite calm, like this way, and I'm going to be pain traded day after day. I'm totally aware of that. Once again, I am bullish on the portfolio. So being net bearish is not what I do. I'm not selling the market right now. I'm just getting my ass off this market, because I know that we can grind our way up without increasing value, and that we're going to fuck it all up with quite some volatile bursts at some points, just like we did for the latest few years. So I still expect a more limited downside effect, but more something like, for once, we're going to get a drop that will probably hold on to some support. So I expect this drop to at least get to 3,500, eventually down to the moving averages in support context if there was some follow through, but this is definitely something that's going to have to be verified at the moment. We need some catalyst to actually push prices to the downside. If nothing happens, then I see no reasons to be extremely bearish. So that's pretty much all about it. Let's talk about Vixx real quick and then I'll move on. So Vixx, as you can see, has a pretty, oh god, I don't know what this structure is. So technically speaking, we're supposed to ride that bearish trend channel because we're in a bearish context. So I suspect that we could have some attraction to this, finally managing our way into breaking the 20 levels of volatility. And of course, if that's the case, then I see absolutely no other reasons but just a painfully 45-degree angle, 0.5% a day type of S&P 500 trading. Otherwise, the thing is that we're still dealing with higher low points and higher high points, which means at some point, if anything fucks it all up, we can rapidly retrace right up to 40, because right now we do have a double bottom structure, so pay attention to this. Even though we've rejected last day's attempt, that doesn't mean we cannot straightforward go to 40 back again. I doubt the 40 level is going to be broken right now, but we could go there still. All right, so pay real attention to this. It's not because it looks like a very calm sea out there that a tempest cannot show up at any time. Can definitely do it. We're going to have a painful presidential change, and we still goddamn don't know about we're going to get the validation from Congress on the 6th of January. It's going to be the next big thing to come. Then the actual president's change later throughout January. So yes, this is going to be about political changes, and you know how stupidly volatile these things can turn out to be with Donald Trump still being in place right now. Though we'll see all about it. I wish it's going to be just as quick and easy as it could, but I'm just questioning these probabilities. So we'll see all about that, even though I doubt there's going to be a massive burst of stupidity from Donald Trump. I think it's just going to resign and move on, but still need to be proven. Okay, so we'll see all about that. So my specific case now is limited volatility. People will probably bet on the side in which nothing happens, and we just let ourselves ride. Okay, so in that perspective, boring stock market, absolutely gorgeous crypto market, but I expect ranges to emerge more than keeping these pace for a much longer period of time. But like I said, I'm not going to fight against, as long as we do have some extremely bullish signals on Ethereum right now. That might drive the rest of the crypto sector, and specifically other altcoins, to keep rising as well. As we've seen, there's some room for Cardano, there's some rooms everywhere. So we could keep rising in the crypto sector, which could somehow keep bringing some gains, but don't be foolish enough. Okay, we've reached out to some very, very interesting midterm levels for smart investors, so they're going to start winding the gains off the table partially. So don't be stupid, okay? It's not an appropriate time to get in Ethereum, but it is an appropriate time if you were a buy and holder to start locking on some nice gains. And of course, we'll reinvest those onto some supports later on. That being said, I wish you guys a pleasant first session of the year. Be easy, go smart with your things. The plans should already be in motion right now, which means earlier today, there's nothing else I'm doing personally, rather than reviewing the existing trades and just assessing that everything is just fine. So the portfolio is well orientated. I'm just going to let it ride the way it is. Bye, guys.